FX Nation, what's up guys? Welcome back to the channel. Welcome back to another video. And in this video guys, we'll be discussing some of the most common mistakes that traders make while trading the markets. And most importantly, how to avoid them or rectify them. As we all know, trading the markets can be a very rewarding experience, but it can also be risky if you don't have a solid understanding of the market and how to trade effectively. Let's take a look at some of the most common mistakes and how to avoid them. So trading mistakes. The very first one, guys, is very simple. Lack of a trading plan or not having a trading plan to begin with. One of the biggest mistakes that traders make is not having a well-defined trading plan. A trading plan should outline your trading strategy, risk management approach, and goals. Without a plan, it's easy to get caught up in the excitement of the market and make impulsive decisions that can lead to losses. So let's say you have a news report about a country's economy improving, and you decide to buy a large amount of that country's currency without a plan in place. You may end up losing money if the market moves against you, or if the news report was not as positive as you thought. On the other hand, if you had a trading plan in place, you could have set a stop loss order to protect your capital, or decided to wait for confirmation of the news before making the trade. To avoid this mistake, take the time to create a trading plan that works for you and for your trading style. Everybody has a different trading style, so make sure that whatever strategy you're using when you create the plan, that it's best fitted for your style of trading. And then most importantly, stick to it. Your plan is what you have to keep you in check. So your plan itself should include a clear strategy for analyzing the market and making trades, as well as a risk management approach to protect your capital. If you don't know, trading is all about protecting capital, because if you don't have any capital, you can't trade. The second mistake is overtrading, or placing too many trades in a short period of time. It's important to remember that the Forex market can be volatile, and it is not always possible to predict the outcome of a trade. By overtrading, you increase your risk of losing money and may also miss out on other potential opportunities. So stop putting 6 or 7.01 trades all at one time. You're paying more in commission per trade and spread every single time. And if you lose those trades, then you're only digging yourself up in a bigger hole. To avoid overtrading, make sure to set clear limits on the number of trades you place. Take breaks between trades to avoid making impulsive decisions. But I think more importantly, guys, is after you take a trade and the trade is over, don't just go look for immediately for another trade setup. Take a second to step back, just take a breather real quick before you get back into another trade. Because a lot of times what we end up is we still have the emotions from the previous trade, whether that trade was a winning trade or a losing trade. And so what ends up happening is we start looking at another setup with the same emotions of the previous one. So this could be very dangerous, because if you just come off of a win, you feel very confident. And so a lot of times you may skip steps in the next setup. Same thing can be said if you're coming off of a loss. How do you feel when you come off of a loss, right? What are those emotions like? Do you think you're going to be in the right state of mind for another trade right away? Because you could then take into account that you may be seeking revenge for the loss that you just took. So just pay attention to these. Third one is not managing risk, or poor risk management. So risk management is an essential part of trading, but many traders overlook it. It's important to have a plan in place to manage risk and protect your cap. Remember that we are in the capital preservation game. We're trying to preserve as much capital as possible. It's important to have a plan in place to manage risk and protect your capital. This can include setting up stop loss orders, diversifying your trade setups, so not taking many trades on one specific pair, but choosing different setups on different pairs, and limiting your exposure in the market. By not managing your risk effectively, you increase your chances of experiencing significant losses. So for example, let's say you place a trade with a large amount of your capital, let's say, but you don't set a stop loss order to protect yourself in case the market moves against you. If the market does move against you, you may end up losing a significant portion of your capital. On the other hand, if you had set up a stop loss order, you would have limited your potential losses and protected your capital. Now, obviously, there's no way in hell that you should be risking probably more than 2% per trade. It just doesn't make any sense to do more than that. I strongly believe that after that kind of percentages, you're essentially just gambling. The fourth one, not staying informed. Staying informed about the market and the global economic events is a crucial part of trading. It is important to regularly review economic news reports and to be aware of any development that may affect the value of the currency that you're looking at or the pair that you're trading. By ignoring important news events, you put yourself in a bad situation to where you could basically make informed decisions that could lead to losses. So imagine that you're looking at, let's say, Euro USD, and you're looking at a potential type 2 pattern that's setting up, but you forget to check the news before you started your trading day that day. And let's say it was monetary policy for euro pairs, and instead of a type 2, it was really just it goes the opposite direction for you. So just make sure that before you even trade, before you start looking at charts, look at what's upcoming today for news. And really what you should do is you should already have, for the month, whatever month you're trading, you should already have it written down so you could physically see it. So if you're not in the habit of going to, like, let's say Forex Factory or something of that nature, and let's say you use TradingView, turn on the events in the settings of TradingView. So when you're looking at the charts, you'll have like these little circles with stars on them at the very bottom. That's an indication that there's a news event that's happening that day. So make it a habit that before you start looking at the charts, that you're aware of what's happening within the news, because there's pretty much news almost every day. The difference is that some news will affect the market, some news really won't affect the market. So very important to stay informed. Next is not seeking help. It's important to remember that you do not have to navigate the Forex market alone. There are many resources available to help traders, including educational materials on YouTube, trading forums, professional advisors, mentors. Do not be afraid to seek help when you need it, and consider seeking the guidance of a mentor, professional trader to help you improve your skills. So seeking help can be pretty simple. If you're new to trading, obviously most people start out with probably looking through YouTube, right? And seeing how to trade Forex or how to day trade, how to trade options, whatever the case may be. But most importantly, be self-aware that if you've been trading for a while and something is not working, you need to be aware enough to seek help. If you trade, let's say, support and resistance, or supply and demand, or order blocks, or market makers, or whatever strategy it is that you're trading, there's going to be other people that trade that same type of strategy. So you could find groups of other traders that trade the exact same, style of trading that you do. And that right there could be an enormous amount of help for you that you can seek from other traders. You can look through different Telegram groups, Facebook groups, or even on TradingView itself. You can look through the ideas of different traders And a lot of these traders have their own individual, groups outside of TradingView, where potentially you could speak to other traders that are more experienced, or possibly share your experiences with those other traders and, get some feedback from them. But always do not be afraid to seek for help. And the last one is over leveraging your account. This is probably one of the most common. The over trading and leveraging of the account are the two, I think, most common ones that could be avoided, heavily be avoided. Okay. Now, leverage is a good thing. It's not a bad thing. But leverage will lead to most traders blowing their accounts, because most traders are not with regulated brokers, right? And so they're with brokers out in these islands that allow you to trade 1,000 to 1, 3,000 to 1 leverage. That's not a good thing, okay? Especially if you don't know how to trade. So over leveraging, okay, it's just putting your capital at risk. So if you know how to trade, you should not need more than 50 to 1 leverage, 100 to 1 leverage. Just be very careful, guys, when you're choosing your leverage with your broker. First of all, use a broker that's regulated and you won't have a problem with leverage, because the brokers that are regulated don't allow you to have this crazy amount of leverage that the unregulated brokers allow you to have. And so leverage can be a good thing, leverage can be a bad thing. And in case in point of, let's say, for those that trade in the US, for example, that are the max leverage you can get is 50 to 1. That's a good thing because it gives you enough leverage, but also the leverage part, not letting you go past 50 to 1, forces you to stay disciplined with the lot sizes that you're using. So just make sure you don't over leverage the account. It's not worth it. Always think of the long-term game, long-term mindset. So these are just some of the few common mistakes that traders make in the Forex market, and some ways to avoid or overcome them. By learning from these mistakes and continually improving your skills and knowledge, you can increase your chances of success in trading. So I hope this video helped you, brought some value to you. If you like this content, please like the video, share the content, subscribe to the channel, and we will see you in the next one. Guys, if you need any more help or you like the content that we provide on this channel, come on over to the FXN MasterClass. It's available right now. What you get essentially is a lifetime membership, a full mentoring course, an advanced course. You get the Blue Summit videos, weekly Q&A sessions every Sunday, group session archives, which that by alone has about 100 hours of content, weekly analysis videos, midweek analysis videos, MT4 and MT5 indicators, a customized trading journal so you could actually journal your trades every day, and then a backtesting journal that you can use to backtest and collect all of your data. Not to mention a mentoring private chat, guys. So all the information is in the link in the description if you want to join now. We look forward to seeing you there, guys, and take care of yourselves.